Hello and welcome to this video. Today I'm going to be doing a stock analysis of Morgan Stanley. Now if you like this video, please don't forget to like and subscribe. Now if you don't know this, Morgan Stanley is an investment bank based out of the United States and it is one of the largest investment banks in the world. Now I'm going to take a look at the stock itself as well as some financials and as well as some fundamentals. Now if you take a look at the technical side of the analysis, as you can see over the last year and a half or so, as you can see, we have had great strides. We're trading all the way down here in 71 and we peaked at about 141 and we're down in 120. Now 120 is actually the modest price range for or the lowest price range estimated for 2025. So we're on the lower side of 2025's yearly estimate for the price target, which is quite interesting. So of course, if you believe price targets, now would be a great time to buy in. Of course, I don't know if I said this, but this isn't financial advice. This is only for educational and entertainment purposes. Now, we are currently at a support line, as you can see right here where the price is at. We are currently on an earlier support level of 120, which is quite great. We recently just bounced back from another support level from right back here, as you can see. So of course, if you don't believe in technicals, I do, as you can see. More often than not, people believe, or it's just psychological to be honest, that earlier support levels that should be reached or broken through, it is purely psychological, as you can see. It is the same up here, as you can see. We have peaks around the same height up here. So we have to break through those up here. And then we are going to see quite great strides. I think personally, I do think they are going to be higher than estimated by the end of the year. And I think that because there are a lot more IPOs in 2025 than there were in 2024, which means they are going to be earning more money than anticipated. We can also see that down here in the earnings. As you can see, they've been up the entire year almost. As you can see, the late 24 and early 25, they were up by quite a lot, and that is because in late 24 and early 25, there were more IPOs than previously, and this was of many think this was because Donald Trump was elected president, because he said he would be more business friendly, and I also think that is true, to be honest. So they are making quite great money, and they pay out great dividends, as you can see as well. All these blue Ds right here, and you can see they pay them out 4 times a year, and that is great because if you want a dividend snowball rolling, well then it's great because it is easier to buy stocks 4 times a year than a 1 times a year or twice a year when the dividend is paid out. Now the dividend they pay out is quite great at 3.8%. That is more than most companies do. The dividend is, of course, never look at this price, always look at the percentage, because the percentage is better because you get more if you get 3% from $100 stock rather than a 1% from a stock that is worth $300, of course. So yeah. Now, as you can see here, annually we are making more and more and more money. We did see a bit of a tumble in the margins in 22 and 23. This was also due to inflation, but besides that, it is increasing revenue quite greatly. As you can see, they almost doubled their revenue. They actually did double their revenue in 5 years, which is quite great. It's also one of the reasons I personally love Morgan Stanley. Now, I don't own any of the stock myself, but I'm quite keen to get in, and I might do it at this price point. I'm just waiting to see for a bit more stability, a bit more sideways trading. Also, we did, of course, as you can see, just recently have a golden cross right here, which is an upwards momentum, which is of course great, and we are trading quite nicely in the RSI despite the fact that we have a golden cross. Now, if you don't know what RSI is, that is the relative strength index. As you can see here, if we are below 70 but above 50, we are in the upper channel of the RSI, which means it is upwards trading. If we are below 50 and above 30, that's in the lower channel and we are trading downwards. So of course, if it's over 70, then it would be oversold, overbought, and if it's below 30, then it's oversold, which often means once it's all the way down here or all the way up here, it often reverses back down. As you can see, they are quite small. We have some spikes, as you can see, which is because a lot of algorithms trade on RSIs as well. And once a stock becomes overpriced, of course, it's going to tumble a bit. And of course, the price is going to correct itself, which means if a stock is trading more and more and more upwards, it's not just going to be higher and higher up in the RSI. The RSI is then going to fall a bit back down, and it's going to increase, if that makes sense. Now, the seasonals, I'm just going to go back 10 years, for 15 years, as you can see here. More often than not, it's a great stock to have. We do see some years with huge losses, but we also see quite many years with double-digit gains. The only year we don't see a double-digit gain in the positives is in 2023, but besides from that, we see great gains, and this is of course also with, and imagine then if you reinvested your dividends every single year into the stock, of course that would be quite great. So it is a stock that I like a lot, but I do love bank stocks in general, so I am of course also a bit biased, but great stock overall. Now for the technicals on this, as you can see here, it is quite great for the day, a buy and a strong buy in the moving averages. And in the summary, it is still a buy. And that is, of course, as you can see, because we have seen it raise in a month, I do believe if we're going to continue to see this quite sharp rise, it is going to be a strong buy within the month is gone. So yeah, within the May month, I think it's going to increase. Now it is interesting because the summer months are often quite bad for stocks because typically a lot of people are on vacation, so there isn't as much volume in the markets. Now, as you can see, the 1-year price target, as you see, we have 26 analysts on it. We have 5 strong buy, 2 buy, and 19 hold. And this is one of the reasons I think it's going to increase more than expected, because I think they're going to be making better returns than I believe many of the analysts do. So I think right now is a quite interesting time to get in, because as I said, if I think they're going to be making more money, and that is true, well then once they show the analyst strong, maybe two times this year, well then the price is going to increase a lot more compared to if they just hit what the analysts expect. So at least that is my opinion. And I also like how spread these are, because let's say it's 26 and every single one was in strong buy, then the stock would be way too overhyped or underhyped if everything was in strong sell. So I like them being this spread out. Now annually, as you can see here, they're expecting to make more and more money and slowly but surely increasing the estimated revenue, which I like quite a lot. So yeah, that was my stock analysis on Morgan Stanley. Now, if you like this video, please don't forget to leave a like and subscribe. And if you want me to make a stock analysis on any other companies, please leave it in the comment section below.